Hey, good afternoon, everyone. This is Mark with Right Line Trading. And what I wanted to do was a bit of a video tutorial on how to manage the consolidation indicator and the volume hammer. Now, the consolidation indicator is a difficult indicator to format. Everybody trades different types of candles and different time frames. So what I want to do in this tutorial is give you a really good feel for how to format your consolidation indicator. Now, first of all, let's take a look at the inputs on the indicator. Now, first, the line width is always going to be 2. Now, the number of bars required in order for you to get consolidation to print, I recommend to keep it 8 under all circumstances. If you move it to 6, you're going to get consolidation printing earlier. If you move it to 10, you're going to get consolidation printing later. So if you want more consolidation signals that are less powerful, it'll print after 6 sideways bars. If you want fewer consolidation signals that are more powerful, on the breakout, you'll go to 10 bars. We recommend 8. The plot offset is 1, always. So 2 and 1 stay, unless you want the line with slightly thicker. Plot offset should stay at 1. Now, it's the range of side movement that I think has more traders confused than anything else. And what I wanted to do was first show you range. Now let's take a look at an 8 range. Now range is very difficult, it's very easy to format. All you do, again, line width is 2 when you're trading range. Number of bars, I recommended 8. Plot offset is 1. And there's an actual formula. Range of side movement in ticks is 1.5 times the size of the range candle. So if you're trading an 8 range, the range of side movement is going to be 12 ticks. 8 range times 1.5 equals 12. So let's just test that out. Here's a range. We're going to go to the indicators. We're going to put 12 in the range side. We're going to look here. There's a consolidation signal and a nice break to the downside. Now this instrument is crude. There's another consolidation signal and a nice break. There's another one. So this is really an optimal setting. Now obviously, again, if you go to the range of side movement, go to 13, you're going to widen the channel and get more consolidation signals, but they're going to be of less power. I recommend, based on the optimization that we've done here in the office, that you stay with 12. Now, if you go to a 13 range, that's an odd number. So you go to 13 times 1.5, that's going to give you 19.5, and you always round up. So now we're going to go, and we're going to change the range size to 13. And hit OK. And then we're going to go to the indicators, go to the consolidation, and we're going to go to 20 ticks. And now we're on a bigger candle, obviously. We're on a 13 range. The crude is very choppy and very volatile. There's your first consolidation signal. Well, like I said, if you want more, do decrease the range of side motion to 6. You can widen the channel from our recommended setting of 20 to 22. But what you want is really powerful areas of consolidation. A fairly narrow channel with a long sideways movement. That's going to give you the best consolidation signals. Here's a terrific signal. So rather than get a lot of weak channels, let's get fewer, more powerful channels. So formatting range is easy. Line width 2, bars 8, plot offset 1, range of side movement is 1.5 times the candle size and range. Not a big problem. Again, you know how to make the consolidation indicator, create tighter channels, by changing the range of side movement to 19 or 18, you're going to get much fewer channels, maybe too few. And if you go to 22, you're going to get more channels because you have a bigger channel. If you require only 6 candles of sideways motion, you're obviously going to get more channels. But I believe these are the optimized settings, 2, 8, and 1, with the range of side movement, as I had mentioned, using the formula. So range is really quite easy to format, no matter what range you're trading. Now, Unirenko is a little tougher, but not much, because it moves a lot like range. There's no time involved. It's only the amount of ticks or pips or cents that the market moves. So if we move the chart to Unirenko, and now our Unirenko 2, they're always multiples of 5, 2, 10, except for the E-mini and the currencies, but we're going to give these all to you. Standard is 5, 2, 10. That's the best optimized ratio. And this is a 2 Unirenko. The tick trend is 2. On a trend, every time there's 2 ticks, you're going to get a new candle. We're going to put that in. And based on our calculation, a 2 Unirenko requires a range of side motion of 15 ticks. So we're just going to go here, and whoops. We're going to go to consolidation, and we're going to put in 15. And here's where you're going to get the best consolidation channels on a Unirenko chart. Right here, right here, right here. Those are the optimized settings. Now you're going to get this PDF. Rory will send it to you, so you're going to know. Now, it just so happens that Unirenko moves up in increments of 15 ticks. So if you go to a 4 Unirenko, which involves taking everything up, you add 5, and that goes to 10. You add 2, that goes to 4. And you add 10, that goes to 20. Now we have a 4 Unirenko chart, and we have to look at the indicators at consolidation, and we know that the range of side movement is now 30 ticks. We have to reset that to 30. And there's your great channels. When the market's trending like this, you're just not going to get a channel. When it starts to jitter, that's where you're going to get your nice areas of consolidation. always remember that I believe that these are optimized settings. But remember, if you want, you can go to 6 bars or 7 bars of sideways. That's going to give you more channels. Instead of taking the 20 here, you can the 30, you can increase the size of the channel to 32. It's going to give you more, wider channel, and the opportunity to get more consolidation channels. But I believe that these are the best settings that are going to give you the really relevant consolidation areas. Then if we go to a 6 Unorenko, we always add 10 to this. We make this a 30. I'm sorry, we add 5 to that. We'll make this a 15. We add 2 to this, we make it a 6. We add 10 to this, we make it a 30. So the ratio stays the same. This is a 6 Unorenko. And based on the formula that we calculated, the 6 Unorenko is going to require 45 ticks of side movement. So we go into the consolidation indicator, change the 30 to 45. Let's wait for it to recalibrate. I might have done it. Now we need to load more days. We only have 2 days to load here. Let's load 30 days. It's taking its sweet time. It's actually pretty late at night here. There's your channel. Really well defined. When the market is moving, you're not going to get one, and here's another one. Very relevant, very important. 2 channels. So setting up range and Unorenko are easy. Now let's go to time. Now time, we had to optimize individually. I mean, there's no straightforward formula. And we're going to give you this as a PDF. So you're going to have the 2-minute, 5-minute, 15-minute, 1 hour, and 4 hour. If you trade a different time frame, we'll optimize a couple of additional settings for you. Now, we've had traders turn in sheets with 15 and 20 additional time frames, and we just can't do that for each individual trader. Try to optimize, and it takes a while to do this. I tried to optimize the times that I thought were the most common times that traders will trade a chart: a 2-minute, a 5-minute, a 15-minute, a 1 hour, and a 4 hour. There may be other times we'll optimize them. We could add it to the sheet. But you have to go gentle on us. Just give us 1 or 2 if you need them. And let's take a look at time. Now let's change from Unorenko and go to time. Now remember, when it comes to all of these settings, a more volatile instrument, one that moves up and down a lot, may require a slightly bigger channel. An instrument that's very, very non-volatile may require a slightly tighter channel. You know how to set that up. It's really easy. Now the first thing we're going to do is we're going to go to a 2-minute. And then let's drop. Now the days to load is at 5. Let's go to 10 days to load on a 2-minute chart. Now this is crude. It's pretty volatile. About equally as volatile as gold, the NASDAQ, the Dow. All of these things are about the same, I think, in volatility. Now you can see we have to recalibrate the channel. Now, we know on a 2-minute, because we've already done the calculation, that a 2-minute requires an 8 ticks of sideways movement. And there's our great channels. They're very relevant, very important. See this break? When you finally break out of consolidation, up. Huge moves out of consolidation based on the settings that we set. Now here are 2 very narrow channels. I mean, they're setting you up for a potential big move. Now, I have no 15 and no 50 here, and there's no market structure, so it's difficult to tell which way you're going to break. But you can see these narrow areas of volatility that catch buyers and sellers in opposite directions. These are just a little bit too wide to be configured as consolidation, but there's not much movement sideways, and you've got the heads up here. And then you get this gigantic move. So now let's go to a 5-minute. And we know that needs 10 ticks of sideways movement. So we go to a 5-minute. And we hit OK. And then on the indicators, all we need to do is just go up 2 ticks. 10 ticks of sideways motion. You get great consolidation areas. When I tell you these are optimized, I mean it. Consolidation blows up. Consolidation blows up. Look at this move out of consolidation. Those are your best settings. Again, you always have the discretion to make the channel wider or narrower on this range of side motion or side movement, and the number of candles caught inside the channel. You can decrease it to 6, where you'll get more channels, but they're less powerful, or increase to 10, where they're going to be even more powerful, but you'll get less channels. I think these are your best settings. Let's go to the next. Let's go to a 15-minute. The 15-minute requires 12 ticks of side movement. There you go. Your best setting to give you the best consolidation signals. I mean, look at that explosive move out of this consolidative pattern. It's explosive. So I think you get the idea on time. 2 minutes, you're going to use an 8-tick range of side movement, 5-minute 10-tick, 15-minute 12-tick, 1 hour is 20, 4 hours is a 60-tick range of side movement. Easy to program. Again, you know if you change the number of bars to 6, you're going to get more channels that are less powerful. And if you don't take these settings, if you can squeeze the channel tighter, say at 55 ticks, make the channel wider at 65 ticks. You're going to get more channels or more consolidation signals on a wider channel, but they'll be less powerful. And the last is tick. And I don't think I have to really do it for you. I'll just do the 144 tick. Now, this has some symmetry because these are like range. I used all fib numbers. Now, if you don't use fib numbers and you trade tick, just default to the closest fib. Let's say you trade a 250 tick. You're going to default to the 233 tick and go to 10 ticks. If you use a 450, you're going to default to the 377 and use a 12 tick. So let's use the 233 tick, which gives you a 10 tick range of side movement. So let's go to tick. And let's go to 230. Well, yeah, we'll go 233. Let's go to a 233 tick. Let's days to load. Let's do 20. Reformat the chart. Loading. But now we have to change the indicator settings. Out on the consolidation, on a 233 tick, your best is 10. So you're going to tighten the channel a bit. You can look behind it. You could see that we're getting a little too many channels. And there's your 10. And this is on a 233 tick chart. And there's a long signal right there. There's a short signal. And these are really optimized. These are great channels. And when you see 2 or 3 forming congruent channels like this, they're even more powerful on the breakout. So that's your optimized setting for tick. So I hope you see clearly how to format the consolidation indicator. You're going to get this PDF and this video. Rory's going to send it to you along with the consolidation settings. And these are just random default settings. You're going to keep that 2, 8, and 1 pretty much the same. I would recommend. And you're going to use the range of side movement that we recommend unless you want to tighten or loosen the channel, which you can do. Let me move this out. And let's go to the pivot indicator. I'm sorry, to the volume hammer. Now I have it here. I just have to find it. Now the volume hammer really there's very little to configure. And let me tell you why. The volume hammer calculates intra-candle. So you can see the spikes in volume evolving as that minute moves through its cycle at 20 seconds, 40 seconds, 60 seconds. Now, we don't have it so you can format it to seconds. And the reason we didn't is, believe me, we do. If you go to a 30-second, if you go to a 30-second, you're going to find that that is going to form a spike so fast that it's going to blow past you before you even have a chance to react. That 1 minute is really a great time frame for you to see. At 60 seconds gives you an opportunity to see this move up. This is a minute, this is a minute, and there's a minute. You can see the spike occurring. Now, if this was twice as fast, be a little bit more difficult to catch. So I recommend you keep the period at 1 minute. You can see if you want to slow it down, if you're trading a very slow time frame, say you're trading a 4-hour bar, you may want to slow this down to 5 minutes. This is a little bit of trial and error because remember, this is moving it at time, and this is moving at, in this particular case, it's tick. So I can't really format them exactly as we would see them in a live market unless I do market replay. And market replay is tough on 2 indicators. It's really easy to do this. If you're trading a very long time frame, you're going to go to a 5 minute. If you're trading anything relatively small, a swing trading chart is going to be a 5 minute. A day trading chart is going to be a 1 minute. And there's really not much more to the volume hammer in terms of formatting than that. And together, they're going to give you great signals. Now, if you have any additional questions, you can send us an email or call Rory. But I'm hoping this is going to answer 99% of your questions, because we've been getting a ton, and most of them is how to format consolidation. What's the best time frame to use on the volume hammer? If you day trade, you want a 1 minute chart. You want a 1 minute spike. If you swing trade, you want a 5 minute spike. If you go for a 10-minute spike, it's going to be too much time. And if you go for a 30-second spike, it's going to happen too quickly. So you're really going to toggle based on how you trade, day trade or swing trade, between the 1 and the 5 minute. So I hope this was helpful. This is going to go out to everyone, and these are the consolidation settings and recommendations for range, for Unorenko, for time, and for tick. And if there happens to be any additional, we'll do a couple of them for you. You're going to get a great feel for them, and you're going to see. I mean, it's really easy, again, just to recap quickly, with Unorenko, every time you go up 2, 4, 6, 8, the next one will be 60 ticks. Range is real easy. It's 1.5 times the size of the candle. It's time that you really have to play with. And Sergio and I played with this for quite some time until we got it exactly the way we liked it. And tick, which just turns out that it really sort of mimics your fib numbers. I like to, when I traded tick, I traded fib number tick charts. I traded a 233 or a 377 tick. I found the 144 too fast. So you're most likely going to use a 10 tick sideways range of movement, or you're going to use a 16 tick for a 610. If you're trading a really long time frame, you're going to go higher. And if you need to, we'll help you format it. But I think this should encompass 95% of all of the time frames that you're going to be trading. So I hope this was valuable, and we're doing really well in the live training room today. We made just under $500 on 3 trades and 3 winners. So I hope you're finding your time in the live trading room very helpful, and I hope you find this short video really helpful. So have a wonderful, actually it's evening here. Have a wonderful night, and I'll see you in the trading room tomorrow. Take care. See you tomorrow, everyone.